All right. Good morning, all you magnificent melonheads of the world, and happy Friday, everybody. Today is June 14th, 2024. And the top story this morning is an interesting one coming out of Switzerland. We've got a Swiss bank was just forced into bankruptcy by FINMA, the Financial Regulatory Authority. I don't know exactly what it stands for, but this is a bank that had their license revoked by regulators back in March. And now they're being forced into bankruptcy. And I'm not familiar with the FDIC equivalent over in Switzerland, but there was an article in Protos yesterday, fantastic coverage by Protos, by the way, that said all their customers are going to get 100,000 Swiss francs back. That's kind of like their $250,000 limit we have here in the States for the FDIC. But the interesting thing about this bank going under is that it was such a crypto-heavy bank. This bank is called Flowbank. And I know a lot of you are probably sitting there saying, who? Flowbank? Has anybody? I've never heard of Flowbank before in my life. It's a small bank, $750 million US in assets. So it wasn't a huge bank, but they were a crypto-heavy bank. They did a lot of business. In particular, they were the primary bank for a stable coin called True USD or True US Dollar. It's one of these little Tether knockoffs. And of course, like Tether, it's suspicious as all get out. But the interesting thing is this bank, the run on True USD, which was thus a run on Flowbank because Flowbank held the assets for True USD, but the run on True USD started back in November. And we are going to tie this into another story that we covered on this channel. I'm not going to give it away in the opening here. You got to stick around a little bit for it. But I think I know what happened here. I think I know what took this bank out. And I think I know what's going on. And it's a little scary. Maybe not scary might not be the right word. It's a little suspicious, and it kind of makes you wonder what else is going on behind the scenes. I think this could be a symptom of a much larger story that is at play here. We're going to get into that today. Shout out to my moderator, Mish, and to Protos, who did some excellent work on this one. Appreciate you guys with that story. Also going on this morning, we've got Adobe earnings were out, and Adobe posted their highest revenue of all time. Revenue was up 10% year over year, driven largely by their creative cloud business, which includes Photoshop and Premiere Pro, which I use for editing my videos. But they're chalking this one up to AI, of course. They're saying, oh, AI growth. Look, I don't know that AI is really driving a big demand for Adobe software. I'm sure some people are trying Firefly. Look, I've tried to use Firefly, Adobe's AI image generator, and I can tell you it's next to freaking worthless. The images it spits out are laughably bad. I've shown some of those images here on my channel. I don't know if AI is really leading to this explosive growth in Creative Cloud or not. It's offered within that suite. But so the story goes, Adobe earnings is part of this larger AI narrative. And of course, the stock is up 15% pre-market on that news. Another AI story that came out yesterday from Bloomberg, we finally got a little bit of details about Apple's big arrangement with ChatGPT. Now, recall at the WWDC conference started earlier this week, Apple released their new Apple Intelligence AI product, which is basically a calculator that works with their $150 pen. And if you draw an equal sign, it does the math for you. It does some other cool stuff. It can, interact with different apps while, without having to open all the apps. It was neat, but it wasn't great. And the market initially yawned at Apple Intelligence. And then a day later, the market just ran with it. And now Apple is at all-time highs again. It's once again the largest company in the world. Off of what? I'm not sure, because the market was very not impressed with Apple Intelligence, at least not until a day later. I don't know what happened. Maybe some meeting was held where everybody got together and decided we changed our mind. We are now excited about Apple Intelligence. But that's besides the fact that Bloomberg was out with the details yesterday about this deal. And guess what? Nobody's making any money off of it. Not $1 is changing hands between Apple and OpenAI, the maker of ChatGPT. They're not paying for it. Apple is not paying OpenAI to use ChatGPT on this new upgraded Siri, and OpenAI is not paying Apple. So nobody's making any. How does anyone make any money off of artificial intelligence? That's what I'm wondering here. This deal, which has added hundreds of billions, Apple stock is up 10% in the last couple of days. So what? $300 billion in market cap has been added to Apple off of a deal that they don't make any money off of. So what's the point? The point of this is to make money, right? Now, I think the story goes, oh, it's about marketing, right? More people are going to buy the more expensive iPhone in order to get this new Siri thing. Maybe. Let me know in the comments. Are you going to buy Apple's new, I don't know what the high-end iPhone even costs anymore. What's it, like $1,600 for the big one? Are you going to spend $1,600 on a phone so it can come with ChatGPT, which, by the way, is an app you can already download and use on it? Or maybe it's going to result in a lot more paying customers for ChatGPT. Are you going to pay to upgrade your ChatGPT so you can get a little bit more functionality out of Siri? Maybe these are really good business decisions. I don't know. But on the surface, it looks like another gimmick that's meant to convince people to buy stock more than actually buy any product or sign up for any service. And well, it's been wildly successful because Apple's market cap is up by about 10% since that story was announced. Also going on this morning, the Bank of Japan was in the news again for doing what they do best. Nothing. Bank of Japan did nothing again. They left interest rates unchanged yesterday, which was largely expected. Now, what was not necessarily expected was that they didn't make any change to their bond buying program. About half of economists, it was 50-50 whether they were going to announce that they were reducing their bonds in June or whether they would wait until July. Well, they're not going to do it in June. They didn't do it yesterday. So they said, we're not going to change our bond purchases until July. But then they also offered no detail whatsoever about what that change would be. No numbers, no quantities, no nothing. So the BOJ once again did nothing, said we're going to do a thing next month, but we're not going to tell you what that thing is. And of course, the whole world is waiting for the Japanese to do something to stop the collapse of their currency. Well, yesterday was not it. And so the yen weakened significantly overnight. And then strangely, it re-strengthened. I'm not sure what that was, whether the BOJ intervened or the finance ministry intervened. But the yen went for a wild ride last night, dropping down to 158.25 to the dollar. Now it's pretty much back down to where it started. And lastly, there was another bond auction in China yesterday. And it was a big one. Well, not necessarily a big one. They were selling their 50-year bonds, which is their longest duration bonds, but they sold them at the lowest interest rate ever recorded. And remember, with bonds, interest rates and prices are inversely correlated, which means those 50-year bonds in China sold for the highest price ever. And China has something going on in their bond market. There is, I don't know if it is a flight to safety, if people are just stampeding into bonds for the perceived safety of government bonds because they're afraid of Chinese stocks, they're afraid of whatever's going on in real estate over there. Or maybe this is everybody is trying to front run the devaluation of the yuan that is arguably coming by the PBOC. A lot of people are expecting monetary debasement to be the way the Chinese choose to address their real estate crisis. But whatever is going on, the Chinese regulators are starting to get worried about a bond market bubble because so many people are piling into these bonds recklessly so. So China's got a real estate bubble that's in the process of collapsing, and that's leading to a bond bubble. I'm sure that's going to work out great for the Chinese. Guys, we got a lot going on once again today, so why don't we shrink my big melon of a head and let's see what's going on in these markets, shall we? And don't forget that like button and that subscribe button right next to it so you can have your coffee with the melon heads, because we do this one every day. The S&P is down about 25 points or 0.46% to the downside ahead of the opening bell this morning. We've got the Dow Jones is also down a little bit more, about 0.75%, 280 points to the downside for the Dow this morning. And the NASDAQ is down about 0.2%, 43 points in the red. So stocks are down across the board this morning. We've got a stronger dollar, up about 43 basis points at 105.63. That's up about 0.41% this morning. Just zooming out a little bit to a weekly chart of the U.S. dollar, guys. I found this was pretty interesting. Now, on the 12th, which was Wednesday in the morning, we had a big drop in the dollar on that lower than expected CPI announcement. An inflation number was better than expected, lower than expected. And so the dollar weakened pretty significantly. But you'll notice the dollar bottomed out around noon that day, 11:30, And then as soon as Jerome Powell started talking at 2:30, the dollar started to strengthen. It's now given back or taken back all of its losses since CPI, and the dollar is actually significantly stronger now than before we got that low inflation print and that relatively dovish Jerome Powell on Wednesday. So the dollar is surprisingly strong here at 105.64 for the Dixie. That's going to put some downward pressure on asset prices here. But bonds continue to move lower, or I should say the bond yields continue to move higher, which means bond price yields moving lower, prices moving higher. Guys, I got my wires crossed this morning. It's early. The 30-year yield is at 4.367. That's down another 3.5 points this morning. The 10-year continuing lower at 4.227. That's down a little more than 1 point. The 2-year is down a fraction of a point at 4.685. And the 1 month is at 5.358. So yields continuing lower. They've moved sharply lower this week. We were about 4.7 not too long ago on the 10-year. That was just a few weeks ago. Now back down to 4.22. So yields continuing to grind lower. Looking over at the commodities board, looks like we got a mixed bag this morning. Spot gold is at $23.28. That's up about $24 this morning, or 1% higher. Check out my favorite of the shiny silver at $29.15. That's up 19 cents, or about 2/3 of 1%. Silver had a pretty rough day yesterday. Copper, meanwhile, is at $4.47 for July copper futures. That's down about 0.1%. July platinum futures are down about 0.6%. September palladium futures up 0.2% for palladium. And West Texas Intermediate crude oil futures for July delivery at $78.97. That's up about 35 cents this morning. I want to take a look at my silver chart. Of note this morning, once again, check out that 50-day moving average. We caught a bounce off of that yesterday. Look at these two candles right there on the 50 line. We bounced off it yesterday. We're moving higher off it right now. So for now, that line is holding. Keep an eye on that level right around $28.90 is that 50-day moving average. A break below that, and that 28.30 level is back in play there. And looking over at Bitcoin, it is up about $240 on Coinbase this morning, trading at 66,982. That's after a pretty rough day yesterday, but still in this range it's been trading at for the last couple of weeks. Now let's talk about the main story about what's going on at Flowbank across the pond over in Switzerland. And again, shout out to Protos, who has excellent coverage of this one. Protos.com, guys. This is a very good, no BS crypto skeptic news website. They're not financed by the crypto industry. They tend to be more on the skeptical side of things, but their coverage of FTX and Tron and Binance has been fantastic. And on this story, they were way ahead of the pack here. TrueUSD Bank, Flowbank, forced into bankruptcy. Flowbank, a Swiss bank that has historically been friendly to crypto firms, has been forced into bankruptcy by FINMA, the Swiss Financial Market Supervisory Authority. The press release issued by FINMA claims that Flowbank no longer has sufficient capital for its operations as a bank, and further claims that it's worried that the bank is over indebted. In other words, this bank failed. All right, they were forced into bankruptcy. Furthermore, the regulators are concerned that the bank entered into numerous higher risk business relationships and processed large transactions without properly investigating. Now, that paragraph is pretty interesting here. Numerous large transactions without properly investigating, strange high-risk relationships. It's almost like the financial regulators have access to certain information now. Put a pin in that. We'll be back. FINMA had previously ordered the bank's license to be withdrawn, but that ruling had been held up during an appeal. The press release also notes that it intends to repay deposits up to 100,000 Swiss francs out of the bank's remaining assets. So the bank has failed. If you had deposits at this bank, you will get up to 100,000 Swiss francs back. So this looks an awful lot like a bank failure here. Now, among the businesses that Flowbank was involved in was TrueUSD, a controversial stablecoin with links to crypto entrepreneur Justin Sun. Sun has admitted he was a partner market maker for this stablecoin, but others have alleged that he owns or at least tried to purchase it. TrueUSD used to disclose that Flowbank was where it stored significant portions of his assets, but eventually stopped these disclosures. As of today, its attestations still describe a Swiss depository institution where the funds are held. So this true USD stablecoin is somehow playing a role in this bank's being seized by regulators and this bank's failure. Now take a look at true USD. This is the market cap of true USD as shown on Coin Market Cap. Now, this chart right now, there's about $338 million worth of true USD that's out there. So remember, this was a $750 million bank, Flowbank was. So about half of its assets are assets that it was holding in custody in order to back up true USD, or at least so that's how the story goes. Now, you see this big drop in market cap for true USD back in March. That's when the financial regulators in Switzerland took away Flowbank's license. There was a run on true USD when that happened. It dropped by about half. And then, of course, it leveled off because a certain crypto exchange halted trading pairs in true USD. But what I want to point out, guys, is go all the way back here. Check this out. The run on true USD, it actually started back in November. Specifically, it started sometime around November 20th to November 22nd is when true USD started to get redeemed like gangbusters, ultimately resulting in what is essentially a bank run. And so it was kind of interesting to see that there was this bank run started on November 20th, roughly of last year. And then in the Wall Street Journal, I saw this coverage of Flowbank, and there was this one paragraph in particular. Flowbank was a banking partner for crypto giant Binance, serving as a custodian for some large traders like Justin Sun that didn't want to leave their funds at the exchange, according to people familiar with the arrangements. And it was when I saw that Binance was involved that this story fell right into place, guys, because recall the run on true USD started right around November 20th. And recall this story from November 21st of last year. Binance CEO Changpeng Zhou pleads guilty to federal charges and steps down. Remember, CZ Binance was able to keep his butt out of the slammer because he cut a deal with, I'm assuming, the FBI, the SEC, all the alphabet soup agencies. He basically opened up Binance's books to U.S. financial regulators in order to keep his own self out of jail. That was on November 21st of last year. And look at when the bank run started on true USD. Right at the end of November, this thing started running down. All the criminals in the world that were doing business on Binance, storing their money in true USD, started to redeem their true USD all at the same time because they knew the U.S. government was coming for their money, and they started getting out of Dodge. And if you ask me, it was this deal that Changpeng Zhou cut with the U.S. government, opening Binance's books to all the law enforcement agencies. And it has, I'm assuming it has just been a gold mine, and that this is one of several stories that we're going to start to see over the coming months where data gained from Changpeng Zhou, basically ratting on everybody around the world, is going to start one by one collapsing these organizations. And then several orders removed, it causes a run on true USD. True USD holds their assets at this Swiss bank called Flowbank. Next thing you know, Flowbank is failing. If you ask me, this story owes its roots all the way back to Binance in November of last year. And that's resulting in the failure of a Swiss bank today. Also going on this morning, we've got Adobe surfs AI wave to post record revenue as its stock soars after earnings. Software company beats expectations for its bottom line. Adobe stock zoomed 15% higher in Thursday's extended session after the company's results and guidance on the bottom line showed upside. The software company generated fiscal second quarter net income of $1.57 billion or $3.49 a share. That's compared with a $1.3 billion or $2.82 a share in the year earlier period. On an adjusted basis, Adobe earnings were $4.48 a share. Analysts were expecting $4.39, so we got a beat on the bottom line. Revenue rose to $5.31 billion from $4.82 billion, where the consensus was about $5.29. So it's a beat on the top line also. And we're looking at revenue growth of about 10%. So these were pretty good earnings from Adobe here. They're not great. 10% year-over-year growth is good, but in the context of some of the numbers we're used to in the AI mania, it's just good. It's not great. Our highly differentiated approach to AI and innovative product delivery are attracting an expanding universe of customers and providing more value to existing users, according to CEO I can't pronounce that CEO's name. I'm sorry. Adobe. Look, expanding universe of customers, providing more value to existing customers. I can tell you, as an existing customer of Adobe's cloud software suite, Creative Cloud, I've tried to use their AI product. It has provided no value to me. I have wasted several hours trying to generate usable images for thumbnails using Adobe Firefly, and it gives me people with droopy face and missing fingers and just weird random objects, heads put on backwards. It's a worthless image generator, in my opinion. I have not been able to get any value out of it. So I would challenge this just based on my lived experience about providing more value to existing customers. But that's not to say it isn't actually expanding their universe of customers, bringing in new ones. I'm sure people are signing up just to try it out. Adobe's results offered some relief to investors after a shaky start to the year for the company's shares. They had lost 23% over the course of 2024 through Thursday's close, with that decline reflecting general software industry pressures, as well as concerns about how much and how quickly Adobe would be able to reap the financial rewards of its AI efforts. Digital media revenue, which includes Creative Cloud and Document Cloud, grew 11% to $3.91 billion, while analysts were modeling $3.89 billion. Adobe's digital experience business, which houses products for data insights and commerce, saw a 9% revenue bump to $1.3 billion. Analysts had been projecting 1.32. So a pretty good day for Adobe, a pretty good earnings release, and the stock is up 15.6% ahead of the opening bell. That is $71 to the upside, trading at $530.40. Pretty good day for Adobe. And also, speaking of AI stories here, Apple to pay OpenAI for ChatGPT through distribution, not cash. And apparently distribution is just as good as money. All of these deals, these big AI deals, very few of them ever involve cash. Remember OpenAI, their $10 billion deal with Microsoft. OpenAI only got $1 billion. The other $9 billion was coupons for free cloud computing uses, free GPU rentals. Not much actual dollars, actual money changing hands yet. The iPhone maker isn't paying OpenAI to use the chatbot. When Apple CEO Tim Cook and his top deputies this week unveiled a landmark arrangement with OpenAI to integrate ChatGPT into the iPhone, iPad, and Mac, they were mum on the financial terms. Left unanswered on Monday, which company is paying the other as part of a tight collaboration that has potentially lasting monetary benefits for both? Emphasis, potentially long-lasting monetary benefits. But according to the people briefed on the matter, the partnership isn't expected to generate meaningful revenue for either party, at least at the outset. The arrangement includes weaving ChatGPT, a digital assistant that responds in plain terms to information requests, into Apple's Siri and new writing tools. Apple isn't paying OpenAI as part of the partnership, said the people who asked not to be identified, because the real deal terms are private. Instead, Apple believes pushing OpenAI's brand and technology to hundreds of millions of its devices is of equal or greater value than monetary payments, the people said. Meanwhile, Apple, thanks to OpenAI, gets the benefit of offering an advanced chatbot to consumers, potentially, there's that potential again, enticing users to spend more time on devices or even splash out on upgrades. So Apple's not making any money here. OpenAI's not making any money here. There's a bunch of potentials, a bunch of maybes, hopefully, maybe someday, but ChatGPT's not getting anything. Apple is basically getting ChatGPT for free, offering it with Siri. And for some reason, ChatGPT's giving it to them. I guess they're hoping people are going to upgrade to the paid version. Whether or not that happens, I don't know. And I guess Apple is hoping people will upgrade to their higher end phones that are going to have this feature. Whether or not they do, I don't know. All we have is potentially maybe, but that's more than enough for this market. Check out what Apple stock has done in the last 5 days. Initially sold off a little bit on Monday on that news, but ever since, Apple stock has gone from $193 a share to $214 a share, jumping 20%. What is that? No, I'm sorry, about 10% in the last 3 days on a deal that doesn't make them any money. Apple stock is down about 0.5% right now at $212.95. Guys, the whole point is to make money. I've been pounding the table on this, and I'm just going to keep repeating myself. There's all these stories about insatiable demand and excessive growth and all these emotionally driven Oh, you better hurry up and buy my stock before it's too late. Nonsense headlines. Nobody's making money yet. The data centers make money and the chip makers make money. That's it. None of these AI companies make any money yet. And now Apple is among them. Do with that what you will. Going across the pond in the Pacific here to Japan, the BOJ's lack of detail on bond buying cuts leaves the yen vulnerable. The bank to set out buying plans for the next 1 to 2 years in July, but Ueda avoids fueling losses by keeping the door open to a July hike. In other words, the Bank of Japan is doing nothing. It's what they do best. The Bank of Japan is making investors wait until its July meeting for details on its pairing of bond buying, leaving the yen vulnerable to further declines. The central bank's decision Friday to stand pat on interest rates was widely expected, but traders were surprised by it just flagging a cut in debt purchases without laying out any figures or a timeline. Given that more than half of economists surveyed by Bloomberg had expected the central bank to begin cutting its purchases in June, the announcement was viewed by many analysts and investors as a delay in the normalization of policy that's vital to the recovery of the currency. The BOJ is doing nothing again. The yen slid versus the dollar to its lowest level since April before trimming the move as Governor Kazuo Ueda spoke at his press briefing. Ueda pushed back against the view that the central bank can't raise interest rates in July while simultaneously presenting its plans for cutting bond buying. Look, guys, Ueda was largely expected to be a hawk when he took over at the BOJ. That was last March. And all we've gotten since in more than a year and 3 months now since Ueda took over, the entirety of his hawkish policy at the BOJ has been 0.1% of a rate hike. That's it. They raised their rates from negative 0.1 to 0. That's all they have done at the BOJ to normalize policy. The most dovish central bank policy in the world, and all we've gotten is a 0.1% rate hike, and they're still doing nothing. They did nothing at this meeting. No change to interest rates, no change to our ridiculous degree of bond buying. More than half of all Japanese government debt is owned by their central bank. This is modern monetary theory in practice here. Their currency is collapsing, and they're still doing nothing. But they said, hey, maybe in July we'll do a thing. We just won't tell you what that thing is or how much of that thing we're going to do. Now, the Japanese yen, check out this candle here. The Japanese yen weakened pretty significantly to 148 or 158 and a quarter to the dollar, basically challenging this prior high from back in April last night. And then it started to fall. Now, it's still higher here. The yen is at 157 and a quarter. That's up from about 157 even yesterday, but it was as high as 158 and a quarter. So something made the yen come back down after that initial sell-off. Maybe it was Ueda's comments that don't worry, maybe, hopefully, definitely, possibly in July, we're going to do something. Or maybe the Japanese finance ministry was intervening again. We don't know what happened, but at some point last night, the yen reversed its losses and recovered most. But still trading at 157 and a quarter. The Japanese currency is still collapsing while its central bank does nothing. Now, Japan has a 263% debt to GDP in that country, and they've got near zero interest rates. So what happens to a government's financial situation when they owe 263% of debt to GDP, and the interest on that debt goes from nothing to something? Well, that government is probably on a course to becoming insolvent. And that's why a lot of people think the BOJ can't raise interest rates, and they're just stalling for time here, but currency traders are sniffing it out. Also going on over in Asia this morning, or this was yesterday, China sells 50-year bonds at record low yield as demand swells. The yield on special sovereign notes was set at 2.53%. That is the lowest yield ever recorded for a 50-year bond. Can you imagine right now locking up your money for 50 years, and all you're getting is about 2.5% interest on that debt? Right now in the States, you lock up your money for 1 month, you can get like 5.35. You get 2.53 for 50 years in China right now. That is how incessantly they are buying up bonds in that country. The frenzy for Chinese bonds is showing no signs of fading, with the nation's longest dated special government note receiving stronger than expected demand at an auction. China sold 35 billion yuan, that's about 4.8 billion US, of 50-year special government bonds at a yield of 2.53, according to traders. That compares with an estimate of 2.58 in a Bloomberg survey. The debt received more than 5 times the demand than what was on offer, said the traders, who asked, of course, not to be identified because nobody ever names their sources anymore. This sale is part of China's 1 trillion yuan special sovereign note issuance for 2024. Investors have been eagerly buying these bonds amid lingering pessimism over the economy, despite warnings from authorities on the risks of a bond bubble, particularly in longer-dated debt. Now, guys, recall just a few days ago, I believe it was in one of my streams last week, the Chinese government was warning bond buyers, if you guys don't stop piling into bonds, if you don't stop inflating this bond bubble, then we might have to have our central bank start to withdraw liquidity from the bond market. In other words, start quantitative tightening, which would be pretty crazy in the midst of a property collapse when their banks are all struggling. So China is trying to slow down this stampede into bonds. It's not working, as evidenced yesterday by this sale. People bought these bonds at the lowest interest rate and thus the highest price ever for these 50-year bonds. So I don't know what's going on. Is this a flight to safety in China? Are people just going to the bond market because they're afraid of stocks and they're afraid of real estate? They're also buying gold. So that supports that theory. Or maybe this is just traders trying to front run the devaluation of the yuan that a lot of people view as inevitable, that China's going to have to print their way out of this property crisis. Either way, the demand for Chinese bonds is out of this world once again this morning. And I just want to say thank you so much to Viv B for once again gifting 10 Nobody Special Finance memberships. Thank you, Viv. That was very nice of you. I appreciate the support of the channel. And guys, if you received one of those from Viv, send a thank you in the comments. That was very nice of her. Appreciate the support of the channel, Viv, and thank you to all my other Melonhead members. And Uncle Fedster, what's going on, brother? He says, check out Professor John Cochran's take on inflation, Fed rates, and monetary policy. Is John, Uncle Fed, is that the policy or the theory that these higher interest rates are now stimulative to the economy? Is that the one? We were just talking about this on my Patreon Zoom call yesterday. The growing theory, it's still kind of an out there theory, that these higher interest rates, because the government is paying so much interest into money markets and into short-term T-bills, that is actually stimulative, that all of those interest payments, which amounted to over $1 trillion last year, is money that's being spent into the economy. And thus, higher interest rates to fight inflation is actually counterproductive, because all that interest being paid out to people is offsetting the decline in borrowing. Now, I'm on the fence on that theory. The math seems to hold up there. I'm just not sure which is the more powerful force, the additional interest being paid into the economy or the lack of borrowing and lending. But I am seeing a lot of people, notably Luke Groman on Twitter. He's been pretty vocal about that. But it is entirely plausible. Let me just say that theory is plausible. Thank you very much, Uncle Fedster. I appreciate the support of the channel and the super chat, sir. And oh my goodness, Nashville Pasta Man. Oh my goodness. Daddy is Andrew Tate's altcoin. Not a joke. Look, guys, enter at own risk. If you want to buy an altcoin named after a celebrity, I can't stop you. All I can tell you is what I do with my own money, and I would light my money on fire before I would buy Andrew Tate coin or Martin Shkreli Inu or any of these other obvious pump and dump scams. I would rather light my own money on fire. At least then maybe I could like warm up my hands while my money burns, which you can't do that when an altcoin goes to zero, as all of these are going to do. Thanks for the laugh, Nashville Pasta Man. All right, Andrew Tate's altcoin. Good luck with that, guys. I'm sure all the Andrew Tate bros. Do we have any Andrew Tate bros in the comments? Hi, everybody. Thanks for the engagement if you're there. Good luck. Thanks for the laugh, Pasta Man. Appreciate that one. And Viv B is back, says, thanks for all the research you do every day. You all keep me sane in this clown world. That's what we hope for, Viv. I just try to call it like it is. You know, I don't have a horse in this race. I don't do very much trading myself these days. I just call it like I see it. And what I see is exactly what you describe, a clown world. This is a world that is desperate to avoid price discovery, making up new debt products, inventing new ways to lend money to each other, creating stock manias out of nowhere, Wall Street conspiring with crooked semiconductor execs and carbon credit traders to inflate a bubble. It's a clown world. That's just my take as well, Viv. Thank you very much for the super chat, the support of the channel, and thank you to the dad, Dan, who also gifted some memberships. Thank you, Dan. Appreciate that very much. Once again, guys, if you got one of these memberships, say a thank you to Viv or to the dad, Dan. I appreciate that very much, sir, for the support of the channel. And thank you, Stephen, mine king, for being a Melonhead member. He's saying Apple ChatGPT is top tier round tripping. You know, Steve, it's not even that. It's non-tripping. It's no tripping. There's no money changing hands. They're just, I'll let you put your product on my device for free. And Apple stock goes up $300 billion. ChatGPT's not making any money for that. I mean, think about this. Think about how much money ChatGPT is going to have to spend. There's a great deal for Microsoft, I guess, because ChatGPT is going to have to rent more GPUs now in order to handle the processing power from the demand of Apple iPhone users. Well, ChatGPT is not getting paid for that, so ChatGPT is going to have to pay out of their own pocket for the computing power that those Apple users use. Well, that means Microsoft's revenues are going to go up, but Microsoft also owns a big chunk of ChatGPT. So is it round tripping? Isn't it? I don't know. Where is the money coming from? Who is going to pay for all of the expanded use of GPUs? I don't think people upgrading to Apple top-end phones and then upgrading to ChatGPT's higher-end service is going to make enough money to offset that. Maybe I could be wrong about that, but right now it looks like no tripping, Steve. But it is symptomatic of the greater bubble that is at play here in artificial intelligence. How big could it get? Bigger is always the answer. It could still get bigger. I'm surprised it got as big as it already has. And thank you very much to Don Knotts, Don Knotts became a member. Thank you so much, Don, for becoming a Melonhead and for supporting the channel. I appreciate that very much. And thank you, everybody, for having your coffee with the Melonheads this morning. I appreciate that. I will be back at 3:15 p.m. Eastern Time this afternoon for my weekly wrap-up live stream. Thank you, everybody, for the generosity in the super chats. Thank you to all my channel members and Patreon supporters. I appreciate that very much. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. And everybody, until next time, live small and dream big.